Hey, this is Matt from InvestiQuant. Today is Tuesday, October 27th, 2020. And this morning we saw the markets open pretty flat following yesterday's large sell-off. And since then, we've kind of just balanced out the majority of the session. We haven't really made much progress to the upside or the downside today. We've got just shy of 20 points of range, which is relatively light for the S&P compared to what we have just been seeing. So what I want to do this afternoon is take a look at what has happened historically when you get a quiet session trading within the prior day's range after a strong sell-off. So let me hop into Discover and set up this pattern and see what it leads to into the close. So we're going to be looking at all four instruments. We're going to use an intraday time-based entry that gets long at 2:30 p.m. Eastern Time. The exit is 4:15 p.m. Eastern Time, which is just the close of the regular trading hour session. I'm not going to use an opening filter here. I'm going to try to keep as many samples as possible, and I am going to go into this post-open filters section. And I'm going to say that the intraday range is light compared to what we've been seeing. And the way that I'm going to be doing that is I'm going to use this intraday range as a percentage of the 5-day ATR. And I'm going to say that the range is no more than 65% of the 5-day ATR as of this 2:30 p.m. Eastern Time entry price. Now, currently, the 5-day ATR for the S&P is about 50 points. So 65 would be somewhere around 32-ish points or so, and we are well under that with us being around 20 points right now at the time of this recording. So I'm using 65 just to try to keep a few more samples. I could go tighter on this. I could do 50 since we're technically less than 50 right now, but I do want to keep as many samples as possible. Next, I'm going to go into this intraday close versus daily levels, and I am going to say that we are trading within the prior range. So we're still trading within the prior session range, and we're doing it on light range. So that's kind of a quiet session. After that, I'm going to go down to price patterns, and I'm going to just go to this unique moves down here at the bottom right and say that yesterday was the largest decline in 10 days. Again, I could use 20 days here as well if I wanted to, but I'm trying to keep as many samples as possible for us to examine here. So I'm going to go with the largest decline in 10 days, and that's a close-to-close decline is how that's defined. And then lastly, I'm going to put us in a similar market environment, which is below the 10-day moving average and above the 200-day simple moving average, and click View Results. And here we go. So these are the results of going long at 2:30 p.m. Eastern Time, exiting at the close 4:15 p.m. Eastern Time, when the prior session was the largest closing price to closing price decline in 10 days. This is taking place below a 10-day moving average and above a 200-day moving average. And then the following session has quiet range defined as less than 65% of the 5-day ATR. And you are still trading within the prior day's range at 2:30 p.m. Eastern Time. So historically, the S&P has 40 samples, the NASDAQ 34 samples, the Dow 41 samples, and the Russell 41 samples. If we take a look at the win rate, which is basically telling us, did we close above or below that 2:30 p.m. Eastern Time price, the S&P is a little weak here at about 43%. The NASDAQ's pretty similar, 44%. The Dow also similar, 41%. And then for whatever reason, the Russell has been a bit stronger in this scenario. So 3 of the 4 instruments very similar with this win rate of around 43% or so, and then the Russell being a little bit stronger than the others. If we look at the average win to average loss from that point in time, these are pretty mild and they're fairly similar. So the S&P is pretty similar. The NASDAQ is pretty similar. The Dow, the average loss is a little bit larger. Noticeably larger, I should say, than the average win. And then the Russell is pretty similar as well. So the majority of these have fairly similar size average win to average losses, but the win rates on 3 out of 4 of them is a little bit weak, Russell being the lone exception with a slightly stronger pattern. So hopefully you found that helpful. Good luck the rest of the day, and we will see you next time.